topic of this pencast is special journals from Chapter 7. In the accounting cycle, as we have learned it so far, transactions are recorded in a general journal, a line at a time. Then they're posted to the general ledger, a line at a time. The general ledger accounts are totaled and transferred to the unadjusted trial balance to check equality of debits and credits. This is very efficient, but it's also quite time-consuming because you have to post a line for each transaction. For example, if you're recording a sale, you would record, let's say, $1,000 into accounts receivable. Sales would get credited for the $1,000. Inventory, or cost of goods sold, would get debited for the cost of the sale, and inventory would get credited for the cost of the sale. And this would record one sale for the month. And it would require 4 postings into the general ledger. You'd have to post into accounts receivable, then sales, and cost of goods sold, and then inventory. And that's quite a time-consuming process. If you have one cell, not so bad. If you have 1,000 cells, that's a lot of work. So if you're a business of a large size, recording transactions in the general journal can be quite time-consuming. In Chapter 7, we introduce the topic of special journals. It changes the first part of the accounting cycle to be from 1 journal to 5 journals. So you journalize in each of 5 journals during the course of the month, and at the end of the month you total the journal, and instead of posting each transaction one at a time, account by account, you post only totals. So if one journal holds 1,000 sales, you have one entry that debits accounts receivable for the total sales, one entry that credits sales for the total 1,000 sales, one entry that debits cost of goods sold for the total of all the cost of goods sold, and one entry that credits inventory for the total cost of inventory. So instead of having 4,000 individual postings into the general ledger, you would have just 4. A great time-saving technique. We have 5 journals. One is called a sales journal, where you record credit sales. Another is called a cash receipts journal, where you record all cash received. Then we have a purchases journal, where you record all credit purchases, and a cash payments journal, where you record all cash paid out, and then the famous general journal, where you put anything that doesn't fit in the other 4 journals. If you think about it, you can only denominate transactions in cash or credit in our economy, and these 4 journals accommodate that. The sales journal is for credit sales, and nothing else. The cash receipts journal is for all cash received, regardless of the source, including cash sales, credit sales and sales journal, cash sales and all other cash received, and cash journal. You can buy things, you can purchase things on credit, so all things purchased on credit belong in the purchases journal. And all money spent, all cash paid, goes into the cash payments journal. And anything else that doesn't fit, like adjusting entries, closing entries, few other items we'll discuss later can all be put in the general journal. Things that are put in the special journals are posted by posting the column totals, which must have a debit equal credit situation in them so it works. And then the general journal is posted, as it has always been, in an account at a time. So the flow is you journalize into the special journals all month long in chronological order, and at the end of the month you total the special journals and post just the totals into the general ledger. And if your debits equaled your credits in each journal, then when you post, your debits will equal your credits. So when it comes time to pull off an unadjusted trial balance, things will work out just fine, and it too will balance. That is the shortcut then offered by special journals. The next thing I'd like to do is to practice with an exercise to be sure that you learn how to sort transactions into the appropriate journal. So we'll stop with our discussion on special journals right there and go to practicing them.